If you're concerned that you being self-employed may harm your chances of getting a mortgage, in this video we're going to bust a few common myths associated with getting a mortgage whilst you're self-employed. Many banks and building societies have tightened their rules around getting a mortgage whilst being self-employed. Many self-employed have got rejected at the first hurdle. Disheartening that it may be, there's still plenty of ways of getting a mortgage whilst being self-employed. We would define the self-employed as the following.
Sole traders, limited company directors, partnerships,
limited liability partnerships, contractors, CIS workers. So let's bust a few myths.
Myth number 1, you need 3 years accounts or tax returns to get a mortgage.
That actually isn't true. Historically, 3 years accounts were required. However, we work with lenders specifically that will give you a mortgage with 1 year's accounts. It may limit your lending options for you if you've only got 1 year's accounts. However, it's still possible to get a mortgage.
Myth number 2, lenders will average the last 2 or 3 years for the self-employed.
That actually isn't correct either. We work with lenders that will use the latest year's profit for affordability. Now you may have 2 or 3 years accounts or tax returns available. However, we've got lenders that will work on the latest year only. An example of where you may want to use your latest year's figures for self-employment could be if you're a newly formed business. Now, the first year you may have had little or no profit, but the second year you could have had a jump in profits. There are lenders available in the market that will consider just the latest year's figures only for affordability. Has your business been impacted by the pandemic? If so, there are lenders available on the market that will ignore that pandemic year and base it on the most recent year for affordability.
Myth number 3, I'm a limited company director and I only extract a small amount of salary and dividends. In order to maximise my ability to borrow more money, I need to extract more money out of my business.
That actually isn't correct once again. Being a limited company director actually gives you a number of ways of extracting income from your accounts. One way a shareholder of a limited company can verify their income is by showing their salary and dividends. This can be found on the limited company accounts or the tax calculation accompanied by the tax year overview. If you're extracting little or no dividends from the business, we may be able to use your salary plus share of profit towards affordability. This can be verified from your finalised company accounts. Lenders can actually go for accountant's reference to potentially verify your income. Now, they will only take a reference from a suitably qualified accountant. With all of this income, some lenders may average, just use the latest year, or only use 1 year that you have available. So there you go. It is possible for you to get a mortgage whilst being self-employed.
If you found this video helpful, please check out our other video on limited company directors.